I was looking at a chart, a 3-month chart, which I think is quite stunning of Brent, front month Brent is 50% higher today than where it was at the start of November, give or take the decimals as well. Huge rally, a huge reassurance in terms of margin for the producers. But you're saying you think despite these moves we've seen from these incredible lows, which of course will hit in April last year, you don't believe that actually the companies feel confident enough to increase their investment?
Yeah, good morning, and thanks for having me. No, it's indeed our view that the large oil and gas majors will not materially increase their investments this year. They clearly have reduced investments in 2020 quite materially. Maybe they up it a little bit, but it's unlikely they will go back to the 2019 levels in terms of investment. And
the key subtlety here that neither you and I have mentioned this year is, of course, they will continue investment. Of course, they will carry on, but it won't necessarily be in hydrocarbons. So have you and I got to stop talking about oil companies and IOCs and gas companies and start talking more broadly about energy companies? Because that's where the investment's going. It's just different kinds of energy.
Yeah, I think it might be a good time to change the terms. Of course, oil and gas production will remain core for these companies for a while. But you point at a very good story, because the investments that have been reduced last year were in the core business. The investments for low carbon operations actually are increasing, and so the shift continues.
Can I ask you about volumes as we're seeing this move on the markets, higher energy prices? We've also seen a drawdown in some of the offshore storage. What are we seeing from the volume point of view, and what will that mean in terms of the drawdown of demand from here?
Yeah, look, obviously the story of the last 48, 72 hours was the production cut announced by Saudi Arabia, which supported oil prices the last couple of days. But the real reason for it, the need for it, of course, is that the pandemic sticks around, and so we all expect demand to pick up, but this could well be delayed by a couple of months, and that was the reason, one of the main reasons for Saudi Arabia to, that supports oil prices, but the demand will not fully come back until the pandemic has been dealt with.
I want to get into the outlook on the profit and dividend side and what investors can expect from here. And on the positive, you say that profits will rebound from the 2020 lows. But what do you make of the journey we're going to see on the profitability side for the next 12 months? And when it comes to dividends that were slashed during the height of the crisis?
So our view specifically on the Western European majors, BP and Shell predominantly, is that the dividends will remain low. Shell clearly has already increased it slightly, but they also cut the dividend by 2/3, and it's unlikely that we will see the sort of pre-pandemic levels anytime soon. BP is even clearer on that point. They have cut the dividend by half and have made a commitment to not increase it. They would use excess profits and cash flows for share buybacks at some point. But for now, the focus of these companies is to repair the balance sheet, and that's obviously positive from a credit perspective.
Sven, are expectations running ahead of reality by some margin when it comes to this focus on the shift to renewable and alternatives? And I looked at the solar ETF yesterday. It was up over 10%. A lot of that, of course, based around the idea that President Biden gets control of both the House and the Senate. But it does feel as though very quickly governments and the investment community are rushing to believe in a very rapid shift to a low carbon future. And yet we know countries like China are still building coal-fired power plants like it's going out of fashion. What's your view on the phasing of this process?
Yeah, look, it could well be that financial markets are a little bit ahead of reality. Peak oil demand is coming closer, but it's not quite here yet. And so, markets trade a future, and that is really where the future lies. But, for the next decade or even longer, for these companies, the Shells and BPs, oil and gas will remain the core of what they do. But clearly, the Biden administration has different policies in terms of energy transition, And so it only makes it more likely that the trends that we see here in Western Europe with the Totals and the Shells and the BPs, might be reflected in the US sooner than later as well.